trading forex that make you go wild. Crypto crazy is a man on a mission like a Tesla. He most def got a vision. Weekly round table, we got no cables. Predicting the future using their bagels. Chart is throwing out numbers, no trouble. He finds the gems for real, no struggle. Calculations running through your mind. Weighing options, seeing what you'll find. Crypto waves crashing like the tide. Hold your breath, it's a crazy ride. Welcome to the weekly round table, where the takes are hot and full.
Good evening, everyone. Thanks for joining us. It is Thursday, October 31st. Happy Halloween to everybody that celebrates the day, or at least enjoys the day with their children, having them go out trick-or-treating with candy, etc. So I'd like to welcome everybody to the channel and my panel, my guests this week. Juan Davidson, as usual, each and every week he's here. Sorry, Juan Gonzalez, each and every week he's here. Chart is unable to be with us this week. I'm assuming he's having some family time, enjoying the day, the evening, the festivities. And this week we also have with us, for the second time, Terry. Thanks for joining us. How are you guys doing?
Doing great, man. Fired up this Hallows Eve. Hoping for a bloody good time. And nice to see BTC not sucking the life or my wallet.
Likewise, it's a good evening. Looking for a couple of meme runners this evening, I think.
Yes, we have our meme coin specialist in the house. Okay, before we get started, I want to make sure everyone understands that nothing we say on this stream is financial advice. It is strictly for entertainment and educational purposes only. Okay, so this week we are going to be discussing, obviously, Bitcoin, the latest move. Is this a confirmed breakout? Is this just a fake out? And what we can expect in the short term. We're also going to be discussing trading and trading strategies, both with leverage and spot. And everything in between. Again, thanks for joining us, and we should get right into it. So I think what I'm going to start with right now is I'm going to share my screen here. Okay. So we'll go over the market and some of the top 100, top 50 cryptos, actually. So we got Bitcoin here at 70,000 for Ethereum. 2516. It's actually up for the week, 3.4%. Here we have BNB. Solana's at 168.96, up 2.5 for the week. Dogecoin, which has had quite the week, it's up 23%. And then we'll include a couple of the ones that round up the top 15. Avalanche at 0.38% for the week. Okay, so we'll go over Market Watch, and then we'll head into the what everyone's here to listen to is the Bitcoin charts. But for now, we'll go over the news for the week. Okay, so according to him, what is this, Cointelegraph, Ethereum price to rally to 3K. Of course, it depends on a few key factors. And right under there, Ethereum, the final dip to 2.5K, which is where we are at right now, is likely before ETH treks to a new all-time high. Now, I'm not sure if I completely agree with this. A lot of the volume and everything from Ethereum is sliding into the other two top L1s, and that being Solana and Sui at the moment. It's underperforming, especially against Bitcoin, but even against Solana and Sui. Ethereum has really been, it's been behind the eight ball. It hasn't been doing well. People are saying it's because of the ETF. There was a lot of inflows in the beginning, and there's been a lot of outflows lately. So I'm not sure if that's suppressing the price or what's going on there, but I don't know. We'll have to see. We will be talking about Bitcoin wipes 500 million open interest from the market. There's been a lot of volatility in the last few days. Exciting if you are a trader and if you catch the right end of your trades. Not so exciting if you are on the wrong end of your trade. And if you're a spot holder, you're liking what you're seeing. Today, a bit of a pullback, but for the most part, things are looking very, very positive. And then this other one article here about, is Bitcoin going to crash again? This was published just before we had kind of this dip that we're going through right now. There was a lot of liquidations, and we'll take a look at the liquidations chart in just a moment. What was the other one I read? Yeah, Dogecoin. As we saw up here, Dogecoin is up for the week and it breaks out of its 3-year channel, which is a bullish sign that maybe Dogecoin is going to go on another run like it did last market, but we will have to wait and see. So let's scoot right over here. What I was talking about earlier. Here are the liquidation heat map. Now, a lot of the shorts, long positions have been liquidated just in the last hour or two, all the way down to about 69,007 before the price went back up. I don't think it's finished. I'm not sure how you guys are going to react. I'll get your opinions in a minute, but I think this could actually go further down because there's a little bit of liquidity here that I think the market makers and manipulators are going to want before we head back up. And as you can see, the short position to accumulate, we're up in that 2.3 or 2.8, close to 3 billion. That's on the daily, but if I switch it over to the weekly, then you can really see, get a better picture of what's going on. You can still see there's a lot of longs hanging out back here, going as far back as the mid 64,000s. I don't think we'll get that low. It's possible, but I certainly can see us getting, in the $66,000-$67,000 range. We'll have to wait and see. But accumulatively, there's over 6.7 billion in longs still in the market, whereas shorts are at 5 billion approximately, where the majority of them are around the 73,000. So right around the all-time highs, low 73,000. So we'll see how that plays out. Now I'll just scoot over here to my. Actually, you know what? I think I'll get your perspective on the market right now. First of all, I'll go with you, Terry. What are you seeing right now?
Well, like we were chatting about earlier, I was a little, I guess, a little disappointed that Bitcoin didn't dip further on the last look down. I was looking for 57, 58, 57, and just didn't exactly get that. But now that it's come up, hit 69, came back down to 65.5, which was a daily pivot, pretty good daily pivot, pretty strong one. I feel better about the action now. I think we're probably going to retrace down and check 69. It's possible you could probably see a bounce, or probably are seeing a bounce actually from the $70,000 area. But I think we're going to come back down and retest 69 before any other tries up.
Yeah, I tend to agree. What about you, Juan? What are you seeing?
Well, it's exciting to see the amount of volume the last 3-4 days. I think it's the first time in October. Well, actually, I think it's the first time since August where we've seen this amount of volume 3-4 consecutive days. And that's what's really kind of spurring the action, and people not wanting to miss out on it. And I think that's great, right? Because you want that, what we call the water cooler talk happening. Everybody's excited to see, are we going to bust through into a new all-time high? And everybody's trying to take advantage of that. Now the market makers are going to play a huge role and how if they want to kind of liquidate a few before they pump up. The good news is I don't think there's just not enough people around the $64,000 area that's taking advantage of it. So I don't see the market makers, like you said earlier, taking it, going all the way down that far. But I think it's trying to create a new range. The reason for it is the election. Elections next week. They don't want to preemptively create any momentum either way. And this is the dangerous time for a lot of people, right? Do you want to put in, take advantage of the election, see if it pumps, see if it dumps, who wins? That could play a role. A lot of the action can happen on that day, the day before, hours after. So it's going to be a really exciting time for people. So a good time to pay attention to the charts, listen to streams like ours, and make the best informed decision you can during that day. Personally, I still recommend for those who normally trade, probably not the best time to trade on election day. But if you kind of want to risk it for the biscuit, it's a hell of a good time.
Yeah, expect a lot of volatility. There's, like you said, there's a lot of factors that go into that. Depends on who wins. The market makers, of course, they're going to be watching very closely to see where they can get the most liquidity from the market. Okay, I got the Bitcoin chart up. As you can see, this is the channel I was talking about. This is on the daily, and as you can see, Bitcoin breaks out. Oh, you can't see my marker. I will. Sorry about that. So it broke out here, and then did the perfect retest, obviously, and then made its way up. Now, we did hit a little bit of resistance right around the all-time high. That was expected. I mean, when you're breaking out of a channel, the most or the strongest point of resistance is going to be the previous all-time high in this current trend that we're in. And then you can see here as well, I was showing you, Terry, this is kind of that trend line that I was talking about, and the two basically coincided. And when the price hit that exact cross point, that's where it took off. Later on in the stream, we'll be going over trading strategies, and I've got a couple of things I want to show on here with regards to that. But when we get to that point, then I will show that. Before we get there, I wanted to also, every week I like to show the rainbow chart. Kind of gives us an idea of where we are in this bull market, if this chart holds true, and it has done fairly well in previous bull markets. And according to this, so far we are still in, or we are in still cheap. We haven't quite hit the hodl zone yet. Hodl zone, well, I'm not sure what the price would be. It's getting up there, 90K or so. But yeah, so far we're in the still cheap zone. So that's very good to see. Nothing getting too extreme yet. Oh, you can't even see that. Sorry, my bad. I forgot to share the screen. There we go. Here's the rainbow chart. And as you can see, we're in the still cheap zone. Sorry about that, everyone. All right, now bring everybody back. Okay, so we might as well get into the trading part of it. It's definitely risky. I don't recommend for someone who's new to the market and new to trading to do any kind of heavy sort of leverage trading. You'll get wrecked. I know when I first started leverage trading, I thought I knew what I was doing. I was in the last bull market. Everything goes up. You think you're the king, and that you can never be wrong on a trade. You end up being wrong. Usually big. You get too greedy. You're way over leveraged, and you end up losing more than you were planning on or willing to. So it's learned by experience, and I'm sure Terry and Juan, both of you can attest. I'm sure you've been in similar situations where you think you're riding high, and then all of a sudden you get a correction in the market, and you weren't prepared for it. You didn't bother doing your charting or your TA. You just went based on gut or euphoria, and that never works out. Do you guys have any stories you want to share before we get into it as to a learning experience you may have had in trading? I'll start with you, Terry.
Nothing specifically, although believe me, I definitely have some stories. I guess my comment is that being new in a bull market is just horrible. It's one of the worst things that can happen to you as a trader, right? Yeah. You really, it's almost like you need the brutal experience. It's like in sports, right? If you're a freshman, right, you just get knocked around and beat up, and everybody's got the moves that you haven't seen before, And I think that's what really has to happen to you, and that doesn't happen in a bull market. As a trader, things just, you can throw money at anything and make more. And so you're doing yourself a disservice. I mean, it's great. The problem is, I think the biggest problem is risk management, really. That's where people blow it. You get your experience in a bull market. You don't really need the risk management so much. Capital preservation is so huge when things turn bearish.
Agreed. You won?
Yeah, so most of you guys who watch the stream, I'm big Forex guy, love Forex, and gold can be one of those mistresses that can burn you. And I can tell you, when I first started trading gold, it was one of those scenarios where gold looked like it was an uptrend, but you saw a lot of resistance at the top. I think that's one of the first time we were breaking around 2,000. And there's like no way we're gonna hit 2,000. It's a recession, or I think we were in COVID during that time. And there's where's this money gonna come from? And sure enough, money found its way into the system, and I had a nice short, and lost a nice little chunk of money there. But with that being said, I could have lost a lot less had I just did some proper TNA, put some little break evens here and there to protect some of the assets. But it taught me a valuable lesson about taking your time and not going on gut and going on your instinct mentally, and just reading the room. Let it break. If it breaks, great. If it doesn't, it doesn't. Makes a difference between losing 1,000 and losing 10,000. Just leave it like that.
That's right. Good point. Okay, I'm going to bring up the chart again. So basically, what I do when I do my TA, when I do my trading, I do kind of like a swing scalp type trade strategy. So what I'll do is I'll do my TA, as you can see on here. I've got this green mark right here around 54,000. I was following the trend, hitting the upper band, lower band, upper band, lower band. We were making lower lows and lower highs. So I haven't really been doing leverage trading for quite a while. Juan, you know this. I ran into a bad experience, so I decided to stick to spot, stick to liquidity pools and lending and borrowing and all that other good DeFi stuff. But I continued to do my research and learn a proven type of strategy. I did, paper trading without cash, just kind of pretend trading. A lot of different dexes have that. Like for example, on this one, which is BitUnex, and then there's Margex as well. You can always do it without using actual money. So I kind of perfected a system. It's not unique to me. I'm sure a lot of other traders use it, but I found it works for me. So what I do is I will open a trade. Once I figured out a level that I'm comfortable with, I will open a limit order, meaning you set an order in the trade that when the price hits that position, you execute the trade. So I did that right around 54,000. I figured because Bitcoin was coming down, you can't see my mouse again. So Bitcoin was coming down to to this trend line. I knew it was going to come close, so I set my entry just above the bottom because as it turns out, it did wick below. So very low leverage. I start off with 3 or 4x max, and that way, if it does continue further down, you're safe. You don't have to worry necessarily about a stop loss. Mind you, this is in a bull market trend. Bear market trend, obviously, it would be a short position, not a long position, but the same tendencies apply. So low leverage, you can set a stop loss way down, but chances are, like when I opened this trade, my liquidation, I believe, was 44,000, and the chances going all the way down there in a bull market, especially in this trend that we were in, was very minimal. But I did set a stop loss just in case. So you set a low leverage, and then as the price goes up, what you do is if it hits certain levels, like this would have been one level I could have taken profit, which I didn't. I held because I thought it was going to at least test this trend line I had here. It did not. It came back down, but that's okay. I was still in profit. But when it made that next leg up and then retested, I took profits right around there just to make sure that I took some off the table. What I actually did is I took some of my margin out, not took profit. I took some of my margin out. When you take margin out of a trade, it increases your liquidation price. But that's okay because when you get this far up, in the 60,000s, and then your liquidation goes up to say 48,000, not a big deal. Bitcoin went up, and I took again more profits up here. I took some of my margin out of my trade. I'll show you that trade in just a minute to show you where it is. And then of course Bitcoin took a dump. Now when it got down here, I added to my margin. What I did is actually I opened another position with lower leverage, which added to my current position. And it added to my overall amount in the trade. So it was going to be beneficial in the end, which it was. I rode it along this choppiness, and then when it got up here, I took more profits. And then on the breakout, I didn't take anything because I knew we were going to go higher. And then, of course, it didn't quite get the top. But on our way up, I remember looking at it at work, and I was like, well, I better take some. So I took some about there. So that's my strategy. I think this way it's a little bit safer, and you're paying yourself. You're making sure that as the price goes up and up and up, you're taking out your margin. So by the end of it, which I will show right now since we are here, by the end of it, as you can see here, here's the Bitcoin one. So my collateral left in this trade is only $4. My liquidation price has gone up to 63,000, but only because when you take out your collateral, obviously the liquidation is going to go up as well. But I have no risk left in this trade. It's not it profits very much, only $41, but the entire trade amount now is $45, and at one time it was around $1,100. So I recently opened an ETH trade, as you can see. So the size of that is just over half an ETH, 1,400. So when the price of ETH, hopefully it does, fingers crossed, when it does decide to go up, well, you can see right here on Bitcoin, the dump bounced right off the 200 AMA. So that's kind of nice to see. Anyway, I'm hoping that Ethereum does end up going up, and then I can do the same strategy. I can go in here, collateral. no, that's only at $100, so I did take some out. But yeah, you just go in here, you edit collateral, you take collateral out, which is basically paying yourself. And then the I've done with my Solana and Bitcoin as they've gone up is you can go into close, and then you can close a percentage. And what that will do, if I was to close 50%, it would take 50% of the collateral I have remaining and 50% of my current P&L, which there's really nothing in there because I've already taken it. So these trades are completely risk-free now, basically. My total collateral is $110, and as the price goes up on all three, it's pure profit. And I'll just close 25% on a 10% move, another 25% on another 10% move, et cetera, et cetera. So that's the strategy I've been using. I'm not going to say it's a safe strategy, but it's certainly safer than just loading up on 10, 15, 20x leverage and then having a flash crash and it wiping out your position, because that doesn't make any sense. Also, keep in mind, as you take out your collateral, your leverage will go up as well. Like you see in my Bitcoin trade, I can no longer take out any more collateral. $4 is what I have left. It goes all the way up to 100x long. You see in my Solana, it's up to 85, and Ethereum is only at 14. So those are misleading because I didn't open the trades at that. But as you take your collateral out, the leverage goes up. Now, I know this is nothing new for you, Terry and Juan, probably, but this is mainly for those that are out there just kind of getting into leverage trading, which, again, I do not recommend doing. It's so easy to get wrecked when you do leverage trading. And I can't stress this enough that you got to make sure you do your research, make sure you study how it works, and you study the market, you do your TA, get your support and resistance zones, kind of get an idea of what you want to do ahead of time. Have a plan on where you want to get in, have a plan on where you want to exit, set your stop losses, all those kinds of things until you get better. And then you can come up with a system where maybe the stop losses aren't as necessary. But I mean, even the most experienced traders can open a bad trade. The market can turn at a moment's notice and catch everybody off guard. So you got to be careful with that. Okay, I feel like I've been rambling on. Terry, I want to pick your brain a little bit on what your trading strategy is. I'm so chaotic that I really don't really describe what I do as being a strategy, to be honest with you. I look at, I don't take myself all that seriously. I like to say I draw pictures and make up stories, so I look at charts. A lot of times people just ask me to review charts. I just look at ones that are interesting, they grab my attention, and then I put a little bit more work into them. And, I look at setups. I'm a price action trader. So I go, a lot off, I work off of inefficiencies. I use the volume profile, the history a lot. And, obviously candle patterns, really big on candle patterns. I would like to say though, when you talk about taking profits, that is so important. I'm really kind of heavy into the memes, right? And so that is such an uncertain and volatile asset. And it's super important to lock away some profits there. Really just as soon as you reasonably can. I mean, if you get to a point where you have some decent profit, and I think this is true of anything, particularly if you're uncertain of the overall direction, go ahead and take some profits and then pull your stop up a little bit. And then that way, if the trade, you've got some more buffer if the trade turns against you. It's so much easier to manage a trade when it's in profit too. That's just, I don't know, there's less attachment to it. And ideally you get to that point where, like you mentioned, where it's a free ticket, right? You're playing with the house's money. You've got your initials out, and then what you make, you can't lose any more than profit. That is a super easy position to manage. Juan? Oh, I agree 100%. The other thing I forgot to mention too is, if the price does come down, I think I did mention actually, you can always add back to your trade. Like you can put collateral back in, put your margin back in, and that way on the next move up, you take advantage. You put profit on top of profit, but never take profit or take money out of the trade and then put it right back in. That makes absolutely no sense. You got to make sure you keep some stored away, put it in a separate wallet, whatever you got to do not to use it, because at the end of the day, you got to make sure you come out ahead. Juan, what about you? What's your trading strategy? I know it's slightly different on Forex, but I mean, everyone has some kind of a strategy they like to use. Or you might be muted.
Of course, you can describe this strategy across the board, though. It's very helpful. The first thing I love to do before I start my trading day is write down what my goal is, period. what percentage do I want to increase? And I use percentage because people get greedy. If you just look at what the natural movement for any market is, if you make 1% a day, you're a happy camper, period, right? But sometimes when you're dealing with $1,000, you're like, oh, 1%, that's nothing. No, it's a huge gain in the market for you. Now, once you get that, what your goal is, you also got to write down what you're willing to lose. And once you got those things in your head, trading becomes a lot more concise, whether you're going to do spot or leverage. And so for me,
more confident.
Yeah, because you got everything under control. So for me, those are the two like key areas. Once you got that locked down, everything's about TNA. What am I looking for? Whether you use S&T strategies, whether you're going to look at fair value gaps, those things help in helping you make the best decision possible. But nothing is ever going to trump experience. The more you look at on charts, the more you're going to say, I've seen this pattern before.
Yeah.
80% of the time, 90% of the time, 70% of the time, these are the expected results. I'm going to take a bet on that. And that's what it is, right? Strategies don't give you 100% answers. And those who think that that's the way, you're going to lose. The whole point of it is that you're going to say 80, 70, 90% of the time, this is going to occur based on this chart. And that's what you're hoping for. And that you hit your marks. And if you're consistent, then you're going to achieve that 70% rating. What's not going to happen is let me close my eyes and throw a dart and see what happens. And that's when you enter that 30, 40%. And hopefully that you leveraged enough or bet enough that you're going to come on top. And you don't want to play catch up. So those are key strategies there. And then once you achieve your goal, right, you have the decision like you do. And I think it's a great strategy. You take a little pocket money, set your break even, let the rest ride. If you win more, great. If you don't, you still achieved your goal. And that's how it should kind of be. That's how you're going to find success. Sometimes it's even better that once you set your success and you set your goals, walk away from the computer screen. Let it do. Let it be emotionless because you already decided what you're willing to lose. If you're going to hover on your screen all day, you're going to make mistakes. Either you're going to say, let me close out earlier. I don't like it. Or you're going to say, hey, let me let it ride when you shouldn't. Let the decisions that you made and trust your instincts. Yep. Trust your TNA.
The way I feel is if you have too much anxiety and constantly watching your trade or watching the chart, you probably have too much in that trade, more than you're willing to lose. That's a good thing you explained there about looking at the charts. Once you study charts, them, constantly and studying them like I do, like you do, Terry, chart, even Boy the Dip, it gets to a point where you can look at a chart and instantly know the strength of the chart for one, two, a pattern emerging and support and resistance right away, and you get an immediate sense on the strength of that token, which is it takes a long time to develop a skill like that. But in order, like before you should even be any kind of a leverage trader, you should get to that point, to be quite honest. I know a lot of people are going to say, oh, it takes forever to learn charts, I don't want to wait. Well, it's either you wait, learn it, and become a better trader, or you're going to get wrecked. It's plain and simple. Now, as for the taking profits, that's a good segue. Now, my strategy, not only do I take profits on the way up, leverage trading. I also want to speak a little bit about, since we're heading into the final phase of the bull market, I believe, anyway, the euphoric phase, the banana zone, as they call it. So, I mean, we'd be remiss not to talk about exit strategies. And the way I do my leverage trading is pretty much the same thing I'm going to do with my spot position. So on my leverage trades, as the price gets up and hits certain zones, I take some off the table. So with my spot positions, it's not quite time yet. We're getting close, not quite time yet. But as the price goes up, you got to take profits out of your spot positions. Not all of it, obviously. I mean, set certain zones, set goals that you want to set. And then when certain tokens or certain positions hit those areas, take some off the table, take 25% off. And then if it retraces, maybe, buy a little bit more back in. But if it keeps going, well, when you get to your next level, take a little bit more off the table. So that people say, well, if you do it that way, you leave so much on the table. You leave a lot behind. Yeah, well, it's better than the alternative of riding it all the way up, expecting it to go further, having a retrace. You think, oh, it'll go back up. Retrace again. Oh, it'll go back up. And retrace some more. Next thing you know, you're in a bear market. And then you don't have any profits or very, very little, or you break even. So, the alternative of taking 75% of what you could have made at the top as opposed to zero, I think I like those odds a lot better. And it's just a safe way, a smart way to do it, because they say that 99% of people in the last bull market and previous bull markets in general lose money. Like they either lose money or they break even. They don't make anything. They get wrecked because they ride it up and they ride it back down, thinking it's going to be, an endless cycle of up, down, up, down. And that's just not the way it works. We're heading into the zone where it's going to go up like crazy. You're going to get your fork. You're going to look at your account. You're going to get excited. You're going to show your friends. Well, guess what? At that point, take some off the table. Guys, what do you have to add to that? Tara, I'll start with you.
Yeah, I definitely agree that, if you're nervous about your position, you are probably oversized. And, I hear that leaving money on the table a lot, right? But I've also seen trades reverse so many times that I just don't have any problem taking a little bit of the profit out. There's also a saying that it's easier to get your slice out of the middle, catching falling knives, calling tops and bottoms. Look, it feels great. And it's like, that is such an awesome feeling. When you get the bottom, you just nail it, right? That is so cool. But it doesn't happen all that often. You can't reliably count on it, right? And you're just so much better off waiting to see some momentum, waiting to see some confirmation or something. Like I say, once it starts moving in the direction, it's like, oh, okay, I have some proof of concept of my scenario. That's the time to enter, in my opinion. Sure, you leave. What you're doing is you're trading, in my opinion, you're trading profits for reliability, right? It's more likely to go your way. And one of the things you can do is, like, if you want to enter really early, you enter with a small, low leverage or just a small spot position, and then add to that if it starts going your way a little bit. That's one way to play that. But I really like to wait for some confirmation. Yeah, no, I agree. Also, you talked about selling. One of the things I like to do, and people are like, "Oh, you don't have anything left to sell." One of the things I like to do is I get to a point where it's usually after I've sold about 50%. And let's say you get like an insane, we get some of these stupid runners, right? And it just keeps going, right? Well, at that point, my rule is, unless there's some sort of structure, which there usually isn't, with names and big runners, they're just going off into nowhere. So unless there's a fib or something, what I do is I say, okay, I will pick a certain percentage of it, and I will sell that percentage of it when it's equal to my initial entry. Okay, I have a lot size, and whatever that is, whatever that is for you, $10, $100, $1,000, you have a lot size for that particular trade, right? And so every time that whatever my percentage is, 25 or whatever, hits the lot size, I sell one. Okay? And so it's self-limiting because it's a percentage. A, you're never going to run out, and B, it's self-limiting. It keeps going higher, right? Each time it's like, it's not an even progression. It's an exponential, not purely exponential, maybe more like logarithmic type progression. Mm-hmm. But like I say, you never run out of money if you sell a percentage, or you never run out of assets.
You're absolutely right. I mean, if you look back on the person who took profits on the way up, and then you look back at the person that didn't and wrote it down. If you've got a $5,000 investment, you took profits on the way up, you come out of it with 20,000. You got 15,000 profit. That's great. Sure, you could have made, you could have held the way all the way to the top and made 30 or 35,000, just as a round number, but no one catches the top, like you said. It's a lot better than the person that wrote it down and then took their money out back at 5,000. You made nothing. But it's always better to take profits. You got to pay yourself, and you'll feel better for it at the end. It may not feel good at the time, especially if you take profit and then it runs up another 10, 15, 20%. Your first thought is, oh, I could have held on a little bit longer. But no, once you secure those profits, that money's actually in your pocket, and you'll be happy about it in the end. Juan, what about you? Do you have an exit strategy in mind?
Yeah, well, like I told you, if you do those steps that I described earlier, especially when it comes to goaling, you have nothing to worry about, because at the end of the day, when you kind of enter this trade, you're gonna set in your stop loss. You can set in multiple take profit points, percentages of that type, how much you would take out when it hits that, and how much you're willing to let ride. So, so for those who are like, hey, I want to ride it to the top, but if you're taking your profits on the way up, you can leave 10%, you can leave 15%, and still be profitable for the day. So if you lost that 10%, no big deal, right? Because you're going to have a break even for that anyway. But if you let it ride and you catch that top and you want to watch that trade, then it's on you. But you're not gonna have that same level of anxiety because you already on top. And nothing is greater than that feeling as I hit my target, I'm great, and I still have 10% left in my trade, and I'm gonna see what happens. Yeah. And it's also a great experience for you, right? Because now I'm identifying, is it gonna continue to go up? I see this pattern, and this tends to happen often, or you're probably not gonna hit that much more. Let me just take that 10% now. And you can practice that chart memorization. It's really helpful maybe to have two screens or use your phone just with a list of patterns you should look out for, you know? And if you're only focused on that extra 10%, then who cares about the rest? Because you already got that in your pocket. So always exit when you can. I love having money in my pocket than money in my dreams. So I can spend the one in my pocket.
I agree. Yeah, see, that's another point too I wanted to make is it's very important to study charts and study patterns and stuff. But, it's funny, the three of us have three different styles. Now, I've been learning charts and learning trading in the crypto segment anyway for about 4.5 years. Now, I've learned, the different candlestick patterns. I've learned, using different indicators, the different EMAs. The MACD volume, there's so much that you can, put together and confluence and stuff and get an idea of what's going on. But everybody has, at the end of the day, once you've learned it, like myself and Terry, we have two separate things that we look at. I kind of, my brain would hurt after a while looking at all these different indicators and all the different things you can look at to kind of get an idea of what the market's going to do. And I've simplified it. I've dumbed it down, if so to speak, to the liquidation charts, the important EMAs like the 200 and the weekly moving average, stuff like that, and of course volume, and then just basic patterns, support and resistance zones, bull flags, bear flags, head and shoulders, all the basic things that you can see on a chart. But you have to master at least something, and everyone uses something different. But I mean, as long as you get a good understanding to what you think the market is going to do, that's what's important. You can't just do it blind. You can't guess. You can't say, oh, the market's pumping, let me put a long here, because that's how a lot of people get wrecked. And as we saw in the liquidation chart, when the price was going up, people were throwing in longs. Like, it doesn't make any sense. People will long into resistance and short into support, and I don't understand that. It's complete. But like I said, you should really learn charting and learn basic TA before you do any leverage trading, and start very, very low. Now, speaking of which, like I said, I'm not sponsored anything by these, but Margex and BitUnex, they're great platforms to use. There's no KYC. You can trade whether you're in the States, Canada, Argentina, Paraguay. It doesn't matter where you are. There's no KYC, and you can trade on these platforms. All you need basically is just an email address, which is awesome. So, okay, in saying that, I also wanted to mention this. What is the biggest indicator or kind of the start of a major bull market is Tether FUD. We always have Tether FUD, and some Tether FUD came out the other day, just before actually Bitcoin broke out. Apparently, some station they published an article claiming that the U.S. Attorney's Office in Manhattan is investigating USDT. The potential charges allegedly center on whether third parties use Tether to facilitate illegal activities like drug trafficking, terrorism, financing, hacking, yada, yada, yada. It's the same old thing. Every single bull market, just before things get riding, there's Tether FUD. It's almost like it could be a bullish signal every single bull market on every 4 years or every 3 years. I guess it would be 3 years and a bit. Of course, the CEO has come out and he said that these claims are not true, and it's just regurgitated news from last cycle. So it doesn't surprise me at all. Tether FUD. What's a bull market without Tether FUD? You guys hearing anything on that front? Did you hear anything about this article or this news?
I'll tell you from my end, because I deal in Forex, and sometimes when you hear news around Tether, you're also going to hear FUD around the US dollar. Mm-hmm. And when the US dollar goes down, gold goes up. And for those who've been paying attention to gold, you saw gold almost reach 2,800, and just like Bitcoin, kind of just stopped shy of breaking it, right? Like, okay, it got there. I got that, I think 27.98, and again, reaching new all-time highs and just rejected. So again, when you hear, especially during now, right, because you have election year and you're seeing one side saying how great the dollar value is, and because of politics, blah, blah, blah. And then you have the other side saying that the economy sucks again, right? Why? Politics. So it kind of puts the dollar, or the magical dollar, I like to call it, in this weird spot of fear and greed at the same time, especially around the election. So it creates this false equivalency. So I'm not surprised that this Tether news came out, because again, it's the same thing, right? You're gonna get the similar results with Bitcoin and how it reacts to Tether news. So I'm not surprised. You just, again, you have to read the room, and nothing wrong with hedging. Just saying, nothing wrong with hedging, and you can take advantage of that. What about you, Terry?
Yeah, I definitely agree with that. And by the way, hedging that's a good thing to mention. That's a great use for leverage. I didn't really, I guess I'm not really paying that much attention to that news, but I do find it funny. And I do tend to agree too that it's the uncertainty right now. It's the uncertainty of the election. There's obviously there's some global uncertainties. We still have wars going on and whatnot. And Bitcoin's kind of hovering. So I think markets in general just kind of unsure as to exactly what they're going to do. Again, they don't. It's funny. They like bad news better than no news. It's weird how markets react.
It's kind of like credit. I agree with you, right? It's like if you have bad credit, you have good credit. It's still better than no credit. And the same thing with the news, right? I expected though a bigger push in either direction when you hear in the global scale about BRICS and the uncertainty now, because BRICS was a big threat at one point, and now with things going on in that system, you would think that the dollar would have just strengthened, right? Because the competition for the dollar now just dropped significantly, but somehow it did it, and it just kind of shows the common person really just doesn't have that much leverage. We just have to go with the wave and let us carry us where it needs to carry us, right? You can make the best decisions that you can, but even though things make sense, sometimes the market maker says no. So just keep that in mind. Sometimes no matter how great your TNA is, sometimes the market maker just says no to your strategy. So just keep that in mind, guys.
I think you're still muted there.
Yeah, you're muted there, bro.
Yeah, my bad. Sorry. I was going to say you had mentioned hedging, both of you guys, and that's a good point. Even though I have some trades open, which a lot of people do, when we bounce off of or come close to the all-time high, when you read the market and you kind of have a finger on what's going on, anybody who follows the markets closely knew that we were going to have a pullback. You can't just keep on going up forever. So hedging, yeah, I kept my long position open, but I also opened a quick short and took advantage of the couple of thousand drop. So that's another thing you can do in leverage trading. You don't necessarily have to close a trade, but if you want to keep a trade open, but you feel there's going to be a little bit of bearishness and price reduction, you can always short that, scalp short. And that's why it's good to have multiple exchanges to use as well. But yeah, no, great points from both of you. At the end of the day, the market makers and the manipulators, they control the market, and they want to take as much of your money as possible. So the least you can do is limit your risk and don't give them, give them as little as possible back. Okay, so I also wanted to mention the ETF inflows. It's been, we had one negative day. I believe that was on Tuesday, but for the last 5 or 6 trading days, going back to last week, there's been some huge inflows. Now, a lot of them are OTC, over the counter, so it's not going to affect the Bitcoin price. And a lot of people say that when the inflows rise, when there's a lot of inflows into the ETFs, that usually follows with a price dip. And it stayed true to that, because we've had this slight pullback. I mean, it's not a major pullback, 3,000 on Bitcoin, but nonetheless, it's still a pullback. And I'm still amazed. TA, people say, how does TA work? How did the price know to bounce off that 200 EMA? Well, that's very simple. There's limit positions open, set for those levels, and when the price hits there, it's bought up, price goes up. It's not rocket science. It's not any mojo or witchcraft. Everything is done with purpose, and it's either by retail leverage traders or market makers. Anyway, I just wanted to mention that. Okay. Actually, I did want to ask you guys. I don't know if either one of you really follow the ETFs, but are you guys hearing anything coming out of there? Like, I know BlackRock now holds like a ton of it. The amount of Bitcoin that is now in the ETFs is approaching 1%, I believe it is, of all Bitcoin, something like that, a stat. And I thought that was amazing, because the ETFs have only been live for 10 months. And, for perspective, in comparison, it took gold, I believe it was 5 years to get the same amount of inflows as the Bitcoin ETF has gotten in 10 months, which is pretty incredible. You guys have any comments on that?
Yeah, huge. I think that the BTC ETF was more of like a learning curve for everybody, right? Because I think nobody knew how the market was going to be, how people were going to react to it. Was it going to be profitable, right? A lot of people are against the ETF. Was the FCC going to go after it? Were they going to prove it? So a lot of mysticism around it. And then it just looks like when you see the ETH version of it now launches, they learned their lessons and they're taking full of advantage of it. And that's why you see those big inflows up and down, in and out. ETH price goes up. It's more volatile now than it, considering that BTC has been so stable. So that's the funny part. So I'm excited to see how ETH responds, right, after a few more months of this volatility.
One thing I wanted to add before you go ahead, Terry, is one of the main reasons why I opened up an ETH position, because I was going to leave ETH alone. I wasn't going to touch it in this market, but there was a report that I think it was $12 million came out of the BlackRock ETF, and those outflows that one day on Tuesday, and that money circulated into the ETH ETF. So, we could see a little bit of a price surge with ETH. Could be completely wrong. It may not happen, but I mean, there was some volume going into the ETH ETF. Okay, yeah, go ahead, Terry. You have anything to mention about the ETFs?
Yeah, they definitely did add to the stability of Bitcoin. There was some initial volatility, but I think overall it just kind of added mass, kind of ballast to it. But I think it's important to note that we're not going to see, or we're just not going to see the same rotation that we have normally seen with the funds into alts. Because the money, and people who own Bitcoin may or may not do that, but the funds, the ETFs are not going to roll their money into, Solana or, some of the other altcoins. That's just not going to happen.
No.
So I'm not saying that we won't have an alt season. I definitely think we will. What we've seen yet has not been alt season, in my opinion. We need to see new all-time highs first, and then some sideways movement from Bitcoin, and we need to see the dominance drop before we really see alt season kick off. But I think it'll be fire. It'll be just crazy.
I agree.
You're still not going to see the same I think it'll have to be new money. Like hopefully this whole meme craze will die out, and then people get more serious about some of the alts, and maybe NFTs at the end.
I was just going to say, this cycle is unique because there's been a lot of firsts, like for example, Bitcoin hitting an all-time high before the halving. And I right now in the market, the ETF inflow is insane. And they are saying a lot of it is by retail. They didn't want to get direct exposure to Bitcoin, so they're getting it through the ETF. But we'll call that institutional money, for simple purposes, just because it is through an institution, BlackRock and Fidelity, et cetera. But the unique thing is we are at this stage of the market where we're hovering around all-time highs, and retail hasn't entered the market yet. And in previous cycles, you get the retail to enter in, you get the FOMO. Bitcoin is talked about at the dinner table, that kind of thing. And that hasn't occurred. You look at Google searches, and searches for crypto or Bitcoin are flat. No one's really interested in it. And in previous cycles, right around now, the retail would start coming in, and we start going up. So if retail does come back, well, it will. But if it comes back as in like it did in previous cycles, the money starts flowing. First it goes into Bitcoin, and then it's supposed to trickle down into Ethereum, and then from Ethereum into altcoins in previous cycles. This year, Ethereum doesn't seem to be, all that popular. It's lagged behind, as we mentioned earlier, in compared to Bitcoin and a lot of other altcoins. So I'm not so sure that when retail comes in, that they're going to go from Bitcoin into ETH. I think this time, when the money comes in, it'll probably go into Bitcoin. Bitcoin dominance, I expect it to go up over 60. I'm not sure where it'll stop. 62, 63%, maybe 65 before it, or Bitcoin dominance, before it retraces and then the altcoins go crazy. I think money could flow from Bitcoin directly into altcoins. And the other thing, as you mentioned, Terry, the meme coins have been crazy this cycle. They were pretty hot last cycle, but it had a start, it had a finish. This year, it doesn't seem to really be finishing. And so a lot of the retail money could end up going directly into meme coins and skip Bitcoin altogether. We'll have to see how that plays out. But yeah, I did want to get a report on from you about the meme space. I know you've got your finger on it. How that's going. There was a bit of a slowdown there, but now it's picking up. Solana, of course, that chain is the chain of choice for meme coins. But there are other chains, for example, Sui, that is starting to pick up volume simply because of the cheap transactions and the speed, the transaction speed. Now, before you give a report, I do have a simple strategy on that. Someone asked me before the stream, am I going to talk about what I do with meme coins? And I won't go too much into detail. That's more your area of expertise, Terry. But what I do, I've kind of got a simple strategy. I'll get in either on pre-sale or right at launch. It has its initial pump. I will ride it up, and it'll always have that correction, sometimes 50, 60%. And I'm talking this happens quickly. Sometimes it's hours, sometimes only a few days. Then it'll have that secondary pump. When that secondary pump occurs and goes beyond the initial pump, which sometimes it does, sometimes it only gets kind of up around that same area, that's when I'll sell. I don't hold on to them very long. I'm talking, these are just regular, memes that come out. I do, however, hold at least one meme on each chain. Like for Solana, it's Popcat. Not financial advice. I'm not saying buy it. That's the one I'm holding. And then of course Whiff, which was one of the OGs. On Sui, it's Suinami, and another one called Puig. And those are kind of the ones I'm going to hold for the bull market because they've been around for close to a month now, and they're already they're starting to go back up again. They're not going to be a couple hours or a couple of days pump and dump sort of thing. But yeah, I don't recommend getting into memes, but if you know what you're doing, you know what to look out for, there's a lot of money to be made. Okay, go ahead, Terry. Sorry.
Yeah, no problem there. You mentioned Sui. Yeah, I think the problem with Sui is that it needs users adoption, because I look at the trading there and it's so thin. You can see it just looking at the charts. The charts they're all jagged if you get down to any lower time frames. So you also mentioned selling on the second pump there. I don't know. A lot of times that second pump, like you say, it doesn't get as high as the first one. It's just kind of like sort of the beginning of that long run down, the beginning of the end there. So I tend to advise people to get a position, where whatever your premise is. If you're in a meme coin, particularly a fresh one, like one that launched today, and we're often looking at stuff that's hours or sometimes even only minutes old. So if you get up like 50%, you should definitely be taking some money out. If you get up to like 2, maybe 2.5x, depending on like what the structure looks like or whatever, you should have your initials out. Just because they're so volatile, because it is very likely going to dump back, you know. And if it keeps running, fine. Like I say, just sell a percentage. I don't look back, you know, the money I could have made on that kind of stuff. And the meme coin is just, it's just day to day, right? I mean, we had some days recently where it's just crazy. Just had a bunch of runners, you know.
Yeah.
It's like you couldn't go to the bathroom without one popping off. It was just nuts. And some days they're just slow. So I guess overall things are still holding up. I'm surprised that they've held up as long as they have, really. I think that once Bitcoin starts moving again, some of the alts will start following it along a little bit, and I think memes will cool off.
Yeah, I agree.
But memes have a lot of money. I think because they've attracted new capital. It's just sort of an easy, catchy, something that people can understand, that they can identify with, that doesn't have anything to do with the tech.
Mm-hmm. Yeah, well, that strategy I had mentioned, it's very quick. Like I'm not talking a daily or a weekly candle. I'm talking hourly candles. You usually get that initial pump, a dump, and then pump up. That's all part of that first phase of a meme coin. And you're right. You know, if you do get up, take money off the table, it's always the best way. One thing I don't know if you guys knew, but I use Jupe. Obviously, Terry, you probably use Jupiter as well, the Jupiter Dex. And there's a new section on there. Here, I'm gonna share this just for us to see. Okay, so up at the top here, when you come to Jupiter, there is a section called Ape, and now what this is everything on Solana meme coins. As soon as they that are launched, these ones aren't even on like Radium or anything like that yet. They are literally just launched. So I would recommend not buying from here, because these could go to zero very, very quickly. But just to kind of give you guys an idea of how fast these meme coins are launched, like 8 seconds old, usually only anywhere between 10-15 seconds, and another one is launched. Like, just non-stop meme coins on the Solana blockchain. It's I don't think people realize just how much volume and how many meme coins are launched every day. It's quite a lot, and 99% of them end up going to zero very quickly. So this is certainly not a place to buy, but you can kind of get an idea of the sheer volume. And this this Ape tab under Jupiter does give you the option to quick buy if you're a degen. And 0.01 Sol, it takes it from your wallet right away. It's like a manual bot. Oh, it's not even showing. Gosh dang. Sorry, forgot to share my screen again. So anyway, as I was saying, you see all these meme coins, like every few seconds they're popping up, brand new ones. And then over on the right side here is a quick buy option. You can quickly hop in for the degens. I do not recommend it at all, because you will most likely lose anything you put into these. But it's like hitting lightning in a bottle. You never know. You might get one that goes to a $50,000 or $100,000 market cap, and you're getting in at 5,000, 4,000, the very, very ground roots, very bottom. So I thought I'd just share that in case anyone wants to check it out for themselves, do their own research. So this is on the Jupiter site. All right. Okay, well, we're heading up to, we are pretty much right at an hour. We'll give you guys an opportunity just to close out here for 1 sec. Oh, did you want to add something real quick, one?
No, I love the info sharing on Jupiter. I think it's a great opportunity for those who kind of, again, it's a little, I would say safer, but definitely something that's profitable. I know you've been talking about Jupiter for a while. When I first learned about it, and again, it was through you, definitely started dabbling in it just to kind of get my hands around it. And I'll agree. You can, as long as you pay attention, get your hands around it, and you can have a little fun with it. So I definitely recommend it.
Yeah, great. Yeah, I will. We'll go over it a little bit more each week. I'll show a few more options there, like the JLP token and a few others. There's a lot to offer on Jupiter. I'm a big fan of Jupiter as a project, as a DEX, and of course being on the Solana blockchain. All right, I did want to also give a shout out to Degens. That is the NFT project that Chart is part of as well. Terry is as well. And it's Stylus, who I guess she couldn't make it today. She was going to maybe pop in. They have you got to check out their Discord. The link will be in the description for their Discord. Also, Chart's link for his Twitter will be on there. He does a daily stream when he gets back from his time off. He does a daily at around 9:30 a.m. Eastern. So his link will be in the description. Here is the link for their newsletter. They just started doing a weekly newsletter, which comes out every Tuesday. There it is here. I believe every Tuesday is what InStylus said. So if you want to subscribe to it, just click on the link, enter in your email, and that's it. Once a week, you'll get a Crypto Weekly newsletter. A lot of good information in there. And on the Discord, you have Terry and Injustice and a whole gang of chart masters. They're always giving their the trades that they're making, entries, take profits, you name it. And while you're there, pick up a couple of DGen boys and girls. Girls, you get profits from spot buys that they are doing on different projects. They pull everyone together, all the money together. They create a portfolio, and then as the portfolio is making money at the end of the bull market or at some point in the bull market, everyone will get a share of that if you want to DGen girls. Did you want add anything to that, Terry, since you are one of the awesome members of DGens?
Oh, that was a great promotion. The one thing I would like to say, though, that anybody, if you are really serious about trading and you're not in a group yet, you should definitely join a group. Join a group and interact there. It's a great way to learn, and they just more boots on the ground, more eyes out there looking for stuff. They will find things. You will get turned on to things that you would have never found otherwise. And it doesn't have to be any of the groups that we're affiliated with, but join a group of like-minded people. You'll just get so much further ahead, so much faster.
Yeah. Oh, it's an amazing place to just educate yourself. You get full of knowledge from all the different people in there. Everyone has there's a lot of different perspectives, a lot of different expertise, both in trading and different projects that are in the DeFi space, NFTs, of course. It's a great place to be. Here's the link will be in the description as well, but here is the link for the newsletter. And then lastly, I just want to give a shout out to Chris over at DeFi Club on his Telegram. He has the DeFi University, which is a free website. It's got all kinds of information, same idea, except instead of trading, it's usually all about DeFi, liquidity pools, airdrops, that kind of thing. And a lot of great information in there. It is free to join. If you want the premium, I believe it's $4.99 a month. So you can upgrade or not. Doesn't really matter. Just there's a lot of information in there. I post in there almost daily as well myself. A lot of great articles just on simple things, like what are token airdrops, what are, how to determine market cap and that kind of stuff. A lot of good information for either new beginners in the crypto space or even people that have been in for a while. They just want to learn a little bit more. The links to the DeFi University and his Telegram will also be in the description. So I appreciate you guys checking it out. Okay, any last words, gentlemen? Juan, I'll start with you. What do you think is coming in the next week?
Election next week.
Yeah.
So if we haven't stressed that, right? I agree. If we haven't stressed that enough, if you guys want to trade during the election, go right ahead. Just know that it's volatile. Do not hedge your positions based on who you think is going to win. It's going to be volatile no matter where you put your money at, where you think is going to win. It doesn't matter. You think, hey, Kamala may not be pro crypto, so the price is going to tank if she wins. No, you'd be surprised. The market makers always win. So they're going to make sure that that volatility stays there throughout the night, throughout the day, even next day. So just have fun with it if you want to kind of dabble. Put in money that you feel you can afford to lose. Pull out your profits if you're going to trade, and have fun, right? At the end of the day, it is a fun time to trade. This is not, if you're going to trade next week, it's not for any, serious money making. It's because you want to have a little fun and kind of learn the market. At least from my perspective, I wouldn't put anything that matters to me in there. That's my perspective today.
Yeah, great advice. Great advice. Terry, yourself?
Yeah, I agree. I think it's going to be pretty bumpy as well. You just never know. This is kind of like a Fed rate announcement, but on a bigger scale. So I would say probably don't. I would say don't trade heavily on it. Certainly, much like Juan said. I mean, maybe if you're in a trade, that's one thing, but I would not enter any large sizes on this one. Make plans for alternate scenarios, right? Know what you're going to do. Have a plan in place before you enter the trade. Have your stops, have your take profits, have that all worked out, and then, plan the trade the plan. So thanks for having me on. It's been a pleasure. I just want to say happy trading.
Awesome. Yeah, thank you, Terry, for coming on. Really, really appreciate it. You're welcome anytime. Anytime you're available on a Thursday evening, hop on. We always love your insights and perspective. Juan, as always, thank you for joining us. We will see you next week for sure, each and every week. Hopefully we have Chart back. Don't forget, anyone who's watching the video, if you haven't liked and subscribed already, please do so. It really helps out the channel. Appreciate everyone for joining. If you have any topic ideas or anything like that you'd like us to cover or talk about on the show, by all means, please leave a comment below and we will certainly get to it. We love talking crypto here, and that is just what we do. We love doing it. Again, thanks everyone, and have a good night. We'll see you next week.
Get the round table ready, yeah. Yeah, crypto friends, the show starts now.